Good morning, my dear friends. In the last class, we understood by inviting the attention on the part of input tax credit chapter, where we understood section 16 series, and also we have been understood 17 series in that section 17.1, 17.2, 17.3. We almost are going to conclude 17 subsection 3. Read with rule number 42 and 43, where we have a formula based bifurcation of common credit on input goods, input services, which we understood by saying that common credit multiplied by exempted turnover for the tax period divided by total turnover for the tax period, the amount attributable to exempted turnover is your output tax liability. This is what I referred in the last class. Up to this, by inviting the attention on the part of rule number 42, where exempted turnover includes supplies are same apply, securities, sale of securities, if anything is there, 1% on the sale of securities is equal to value of exempt supply, sale of land, sale of building, the stamp duty value, the value shown for the stamp duty purpose is the value should be exempt supply, followed by nil rate of GST, followed by supplies, which is non-taxable nature, is included in the value of exempted turnover, but you should not include, for the God's sake, supply belongs to schedule 3. Supply excludes, you accept this particular sale of land and building, or accept warehoused goods are before clearing for home consumption supplied. Thereafter, interest and deposit loan expenses should not be considered in the value of exempted turnover for the formula purpose. In the last class we understood, and also we understood last class the sales tax, VAT, namely CST or CST or value-added tax, VAT, or central excise duty as state excise duty, if anything is there, should not be considered in the exempted turnover. And any export incentives like remission of duties and taxes on exported products, if anything is there, should not be considered under the exempted turnover. Up to this we understood in the last class, and we did a problem also which was appeared in the exam of CA final quite sometimes before. Get my points? These are all the points in the last class we discussed, my dear friends. In fact, now I am going to take up capital goods credit. Capital goods used commonly for taxable as well as exempted supply. How should consider the proportionate reversal of input tax credit? Here there are two steps. The first step, declare the life of the asset as 5 years, which is equal to 60 months. The count reckoned from the date of invoice. If so, the GST on such capital goods divided by 60 months, per month GST comes. That you take for the given tax period as a common credit, that you multiply with the exempted turnover divided by total turnover, then you will get the proportionate amount of that month credit attributable to exempted supply. As a result, that is output tax liability. Simple, very simple. What I will do here is, even for the given case, I will bring to a notice one illustrative example in this regard. There in our material here, the illustrative example is as follows. Simply, you just look and go through this example enough for your exam point of view, you will be able to get through the examination with good marks. So, in that manner, I am bringing to notice a problem. Roy Industries is a manufacturing company registered under GST. It manufactures two taxable products X and Y and one exempted product Z. The turnover of X, Y and Z in the month of April was 2 lakhs, 10 lakhs and 12 lakhs. Roy Industries is in possession of certain machines and purchases more of them. Useful life of all the machines is considered as 5 years. From the following particulars furnished by it, compute the amount to be credited to the electronic credit ledger of Roy Industries and amount of common credit attributable towards exempted supplies, if any, for the month of April. Particulars and the GST amount. Machine A purchased on 1st April for being exclusively used for non-business purpose 19,200. Machine B purchased on 1st April for being exclusively used in manufacturing general supply 38,400. Machine C purchased on 1st April for being used in the manufacture of all three products X, Y and Z 96,000. Machine D purchased on 1st April and 2 years before 1st April for being exclusively used in the manufacture of product Z. From 1st April, such machine also be used for manufacturing product X and Y. Total GST 1,90,000 rupees. Machine E purchased on 1st April, 3 years before 1st April for being exclusively used in the manufacture of product Z, product X and product Y. From 1st April, the machine will also be used for manufacturing product Z. Total value 2,88,000 GST. This entire problem is an RTP problem. As per that, I am presenting the solution. Just relax and listen. You tell me, if a machine exclusively used for non-business purpose, ITC allowed? No ITC. Section 17(1) is clear, my dear. Thereafter, machine B for being exclusively used for manufacturing zero-rate supply. Taxable supply includes zero-rate supply. Therefore, ITC fully allowed. ITC allowed. Fully allowed. Then machine C purchased 1st April for being used in the manufacture of all the three products. Common input tax credit. ITC allowed but common credit. ITC allowed, fully allowed, but it is called what? A common ITC. Further, machine D purchased on 1st April, 2 years before 1st April for being exclusively used in the manufacture of product Z. From 1st April, such machine will also be used for manufacturing product X and Y. So from 1st April current period, this become a common credit. Earlier, credit not availed. At the same time, the company not capitalized this GST along with the machine for depreciation. Taking that as a assumption, ITC is a common credit. Now can I avail ITC? Yes. That time not able to avail because I use for exempt supply. Now I can avail ITC? Yes. If there is a case, is a common credit, common ITC, but ITC fully allowed. ITC fully allowed. Get my point, sir? But one thing is clear. Hey, mister, for the past 2 years, you use this machine for what purpose, Raja? For exempt supply. To that extent, proportion is you are not eligible to claim ITC. What proportion? How to bifurcate means 5% per quarter, part of the quarter, full quarter, from the date of invoice till the date it become a common credit. So here how many years before? 2 years before. Therefore, each year 4 quarters, 8 quarters, 5%, 8 quarter equal to 40%. So 1,92,000 rupees multiplied by 40%. How much comes here? Here from this something is output tax. Then ITC is not allowed. Section 16, subsection 3 will apply. Output tax how much? Not this particular 1,92,000 rupees. It is out of 1,92,000, not 96,000. From this output tax liability. Output tax is 40%. How you got 40%? It is 5% per quarter for 8 quarters, 40%. How much is it? 76,800 is our output tax liability. But ITC allowed 1,92,400 in the electronic credit ledger. Electronic credit ledger. Thereafter, machinery purchased on 1st April, 3 years before 1st April for being exclusively used for manufacture of X and Y. From 1st April, the machine also be used for exempt supply. That means earlier they have availed the ITC. 2 years, 3 years before they availed the ITC because it is used for taxable supply. Today, ITC again not allowed. But from today, it become a common credit. It become a common ITC. But ITC already availed. Get my point, sir? Now, if so, what they're asking here? From the following compute the amount of credit electronic credit ledger. Amount credit electronic ledger how much means? Look here, 38,400 plus 96,000 plus 1,92,000 among credit electronic credit ledger. Of course, out of 1,92,000 rupees, 76,800 is not eligible for ITSC. That will be part of your output tax liability. You take the credit 1,92,000, but you have to liability 76,800. So net only I am availing. But the problem asking here, what is the amount credited to electronic credit ledger? When a crediting, should credit full amount. Thereafter, in the GST 3B return, I should consider 76,800 as my output tax liability. So net only I am going to take. Get my point, sir? Now, in that given case, I am just taking this my pad into proper direction, my dear. Yes. So handwriting will be good. Now listen here. In the given case, my amount of credit for machine be fully allowed, correct? 38,400 plus 96,000 common credit. Thereafter 1,92,000 rupees. But 2,88 won't be claimed as input as already availed. So how much credit is available here? Quickly, fast. Quickly, fast. How much you got, sir? 3,26,400 is a total ITC credit electronic credit ledger. That is GST at 2B you can take, or otherwise electronic credit ledger you can consider in your GST at 3B. Is clear? At the same time, you have to take output tax how much? 76,800. That one cannot be denied. This is out of 1,92,000. 76,800 is belongs to previous period. We use it exclusively for exempt supply is output tax liability. Is clear? Then they are asking furthermore. We got one electronic ledger amount. Thereafter, an amount common credit attributable to an exempt supply for the given month of April. In that case, in the given case, common credit. What is common credit? One is 96,000 plus 1,92,000 rupees plus 2,88,000. This is a common credit. This is a common credit. This is a common credit. So total how much is equal to 5,76,000. So 5,76,000 common credit divided by 60 months, because asset life is declared as 5 years. All are within 5 years only. Therefore, how much comes here per month? 9,600. So 9,600 common credit for the month of April multiplied by exempted turnover. Look on the screen. Exempted turnover how much? Product Z how much? Product Z is 12 lakhs. Product Z 12 lakhs. Thereafter, product X and Y 10 lakhs and 2 lakhs and 10 lakhs. Correct, sir? Thereafter, 12 lakhs is a product Z. So, exempted turnover here comes rupees 12 lakhs. They were told no 24 lakhs. 4,800 is a common credit output tax liability. Output tax liability from the common credit. From the common credit is a common credit. 9,600 is a common ITC for the given tax period of April month. Is clear, my dear friends? Loudly. Yes. Then the material also. Yes. Taxable supply eligible to ITC, availed ITC. Now your point here is It should not be, it should be reversed, correct? Now, this is the answer given in the RTP. Is clearer, brother? Can you consider this now? Refer the answer first. So, 7 lakh, 5 lakh 76,000 is what? Common credit. 5 lakh 76,000 common credit. Is clearer? Then reversal of ITC for the given month 4,800. Here we got how much? 4,800. Got it? Amount credit letter and credit ledger. How much I said? 3 lakh 26,400. Common credit. The credit attributable to letter and credit ledger 3 lakh 26,400. Is clear? It is as per the institute. But if you ask, Mr. Rafi, what you are doing is a correct? I will say no, not a correct. Then what is the correct one? Because I can't question the institute. Nah. If I question the institute one finger, 3 fingers to mine only. It's not criticism to any person. But if I am the accountant for my client, what I will do? Listen. When you take here, brother, common credit, how much you taken? 1 lakh, 5 lakh, 70, which is moped up with the values from 1 lakh 92,000, which includes 76, 800. My output as liability, I eliminated. Na? That is not a common credit. 76,800 not common credit. I should bifurcate that fund. That means 1 lakh 92 minus 76,800, how much comes? 1 lakh 92 minus 115,200. That is the right approach. Because what is exclusively attributable for a given supply, I am going to consider the output as liability, which is not a common credit from today onwards, correct? I eliminated it. Then coming to 2,88,000. 2,88,000 for 3 years exclusively used for taxable supply. Why should I have to consider this for my common credit? Therefore, 3 years, how many quarters? 12 quarters. 12 into 5% per quarter is equal to 60%. Eliminate 60% from that. Reduce. How much 60% will come? 2,88,000 into 60% equal to 1,72,800. That much you eliminate from 2,88,000. 1,15,000. Then here it should be 1,15,200 from now onwards is the correct amount, which is going to use for taxable as well as income supply. Therefore, my common credit is not 5,76,000 is equal to how much? 3,26,400. If that is the case, on which I am going to apply by saying that here 3,26,400 divided by 60 months is equal to how much comes here? 5440. If that is the case, my common credit is not 9,600, it is 5,440. Then my credit reversible for the given month is equal to how much? 2720. 2720. So my output is 2720. If I say you are going to well accept, am I right or not? Is the right approach.
Excluding that exempted, whatever I think is now what is there is taxable.
Which is
then what is the point of common credit? It's exclusively for tax.
No, Raja. Earlier I used machine D. I used for what purpose earlier? Income supply. That much, how much income supply? 76,800. I deducted. The balance 1,15,200 from today, 1st April, I am going to use for taxable as well as exempted. Already I am using exempted purpose. Now I am going to start with taxable also. Then become common credit. No, X, Y, Z. So far for 2 years, Z. From 1st April, X, Y also. Then is common credit. No. You got the clarity? If I say like this, can you accept? Fair enough. My output is liability appropriately 2720 instead of 4,800. So right approach is this. Follow this. Exam also follow. Author saying, authority and the subject saying for the past 25 years. For information, my folding hand, I'm telling you, the book of mine, Indirect Tax Laws, published by Bharata Publication, is referred by department people. One fine day, I got a call from a person, sir, your book is not available in the market. Where we can get, sir? I thought he may be a student. Available in the market, sir, 30th edition, please get it. No, sir, myself and my staff referring your book here, but the book is not available, sir. Then I asked, sir, may I know who is? He replied, I'm a Deputy Commissioner, Central Tax, Mumbai branch. Then, sir, just send your address. We will send the compliment to you, sir. Not required to go and buy, sir. We send to your place. Then he said, sir, your book is so simplified, written, easy to understand the provisions. Therefore, we are referring from the years together. Because my book is in the market almost for the past 16 years. 1-6. You get my point, sir, what I'm saying? And the gentleman asking, CA final book. Why CA final book for him? Because I address for the CA students. And that has been taken by the department people for reference purpose. I'm very happy. I'm not going to say any orally something creativity. If you ask, I have the proof, conversation made with the officer. My WhatsApp messages are there. You get my point, sir? So proud of that. So you please consider this. You consider this. The revised answer you consider. It's clear, sir. With this, section 17, subsection 3 is completed. Now going to 17, subsection 4. Section 17, subsection 4 refers as follows. Section 17, subsection 4 refers as follows, which is for a banking company, for an NBFC, where they have the option to choose 50% of common credit, avail the ITC, balance 50% of the common credit, output as liability. This option is given to a banking company or an NBFC, not to outsiders. This option given to banking company or NBFC. You get my point, sir? This option, if they want to exercise, please study on cool. CF final classes. Most welcome. So far, you attend the 2 to 3 classes online? Attend? Excellent. Now, this banking company or NBFC, in front of him, 2 options. Whether proportionate reversal, as we understood in the rule number 42, 43 under 17.3. Get my point, sir? Or leave it. Go with the option 50% avail the ITC, balance 50% pay to department. Meaning what? Not to avail ITC. Meaning what? A simplified approach is given for banking company NBFCs. If it's a common credit only, I'm telling you, my dear, 17.3, 17.4. Proportionate reversal for what? Common credit. If it's not a common credit, exclusively used for taxable supply, ITC fully allowed. Even for banking company also option, only in replacement of proportionate reversal, common credit, you take 50% ITC, 50% forgo. Get my point, sir? However, this particular 50% concept not applicable, 100% can be avail ITC if there is a transaction between interdepartmental, namely one branch transferring the credit to another branch, where one branch already avail 50% credit. If that credit transfer to other branch, the other branch should avail 100%. Again, should not go for 50% of the 50%. It becomes 25%. Get my point, sir? You don't worry. We will have provision here. We have the provision. Provide further that the restriction of 50% shall not apply to the tax paid on supplies made by one registered person to another registered person having the same permanent account number. Meaning thereby, one example I am going to bring to notice that gives clear clarity on the part. Look at the screen. Example. OK Bank has availed 25 lakhs in the month of December as the credit out of which 5 lakhs pertain to non-business, 7 lakhs pertains to credit availed. Second proviso 17.4. Second proviso 17.4 tax about what? 50% concept not applicable in the case of inter-departmental transfers. Find the total amount of input eligible to OK Bank. OK Bank avails input tax credit equal to 50% of eligible credit. That means common credit. Here we have common ITC 25 lakhs is given. Is clear as sir? From this 5 lakhs 5 lakhs pertains to non-business. Section 17.1 credit fully not allowed. The balance 20 lakhs. Balance is 20 lakhs. This out 20 lakhs, 7 lakhs belongs to other department. That means 100% ITC allowed. Balance how much? 13 lakhs. In 13 lakhs common credit, how much? 50%. 50% equal to how much? 6 lakhs 50,000. 13 lakhs 50% Raja is equal to 50% equal to 6 lakhs 50,000 plus the eligible credit fully how much? 7 lakh. Total how much eligible? 13 lakh 50,000. 13 lakhs 50,000 ITC fully allowed. This is the ITC allowed to the bank. This is option given to banking company NBFC. Either they can go proportionate reversal or they can go for option 2 availing 50% ITC and the common credit, balance 50% not availing. That means output as liability. Meaning 100 rupees common credit, avail 100 rupees, output as liability 50 rupees. How much net availed? 50 only. While availing ITC 100 rupees and output as liability 50 rupees. Like that you proceed. It is very simple for a banking company which is larger operations. Practically difficult for them to go for proportional reversal. For them, for banking company NBFCs, they can go this option. If the banking company NBFC going with this option, question of exempted turnover, taxable turnover, bifurcation not there. If you go with the 50% option, if you go proportional reversal, then you have to identify as per rule number 42 or 43 what is the exempted turnover as referred under section 17.3. Exempted turnover for banking company NBFC which includes interest earned on deposit loans advances. For others, interest earned on deposit loans advances should exclude while computing this. In the last class I referred this point. We did the problem also. With this 17.4 is also completed. Now we are moving on to section 17.5 blocked credit. Excellent manner I am going to present. Just look and understand blocked credit, which is a very important not only from the exam point of view, from the practice point of view. If the credit is blocked, even though you used that inward supply in the course or furtherance of your taxable supply, ITC not allowed. ITC blocked means it is not allowed to go further. It should be form part of your cost only. Which one? GST. GST paid on inward supplies form part of the cost. You can't avail the ITC, blocked. How to understand this? Section 17, section 5, clause A to clause I. So many clauses, which is 9 clauses. Apart from that, inside there are so many subclauses. Under the subclauses, Roman 1, Roman 2, Roman 3. A big study. You don't worry. You will catch hold now. Just you listen, ask the doubt whenever you have sufficient. You get it. Yes. Hold the mic. Mic required. Mic required, brother. Because my below students are asking the doubts. Other students of mine who are listening the classes through online or through recorded classes, they should know what is the doubt now. Otherwise, what happened? No, your voice not capturing here. Question must be carried with the answer. Answer without question is not answer. That's why you please hold the mic and speak, my dear sir. Whoever maybe want to speak can speak with the mic. Half-length candidates. Most welcome. Yes, go ahead. Why given to the banking company? I said, na? What I said? Oh, your doubt is, just ask me again, please.
Like this 50% ITC
Why given to banking company?
banking.
Why banking company only given? See, banking company operations to a client, to a customer in a month, not 100, it is thousands of transactions for one client. Bank has so many clients, so many customers. Those transactions for a given tax period for a month runs in terms of billions. For a banking company, identifying each one exempted, taxable, Monday conjure means brain will become heat. Therefore, as a facility, not a compulsion, banking company, you are feeding up with the proportionate reversal. Yes, sir. For you, we open a door. You take common credit. You know common credit. That amount, 50%, IT is not allowed. 50% allowed. Sir, 100% credit is there, sir. Where? GST 2B. Avail it. Out of that 100% credit, what you avail? 50%, you show your liability. Where? In the GST 3B. We won't ask any further more doubt. Go ahead. Obviously, banking company has the exempt supplies. Obviously, there are so many exemptions are there for banking companies. You aware of that or not? Banking company offers debit card, credit card swiping services where the value not exceed rupees 2000. Banking charges exempted from the payment of the GST. Interest on deposits, loans, advances is what? Exempt supply. GST not apply. Banker offering the what? Money exchange services. To whom? To another money exchanger, not to public. Transaction between two authorized money exchangers by Reserve Bank of India is exempt from the payment of GST. You get my point, sir? So there are so many exemptions are for banking companies, and identifying for tax period too difficult. A facility only granted is clear, sir. Further, referring to you now here, blocked credit in the Bear Act, section 17, section 5, title itself is what? Blocked credit. Where I am taking into account first capital goods. Listen here. The following capital goods are blocked credit. ITC is not allowed. Sir, what are they? 1. Motor vehicles for transportation of persons, meaning block credit only for motor vehicle meant for transportation of passengers, not transportation of goods. For transportation of goods vehicle, if you purchase using in the course or furtherance of your taxable output supply, ITC allowed. You have to say ITC allowed. Only passenger vehicle where the seating capacity not more than 13 persons including driver. If you purchase, ITC not allowed on such vehicle. Example, you are a qualified chartered accountant. You practicing in Chennai. You wanted to buy Tesla company car from Mumbai, 2 crores. You purchased. For 2 crores, almost all you paid. For example, I'm telling you, Raja, 56 lakh rupees GST you paid, 28%. 56 lakhs rupees GST. The invoice came 2 lakh, 2 crores, 56 lakhs. Invoice value 2 crores, 56. GST is how much? 56 lakhs. Car is 200 lakhs. Name me 2 crores. Can you have LTC? Tesla company car sitting capacity 5. Can you have LTC? No. Therefore, for you is what? It is the cost of purchase. What is the cost of purchase of vehicle? 2 crores or 2 crores 56 lakhs? 2 crore 56 lakhs. Is clear? Any difficulty? Now, you are arguing, sir, I purchased the car only for client meeting purpose, sir. Without the car, I can't able to go to the long distance. So Tesla company becomes protective and more sophisticated AI technology is there inside. Without handle, the car will go, sir. So I want that car. That's why I purchased, sir. It is useful for my business, sir. So what? I am using for taxable supply. So what? IT is not allowed. It's a black credit. Then when allow the ITC means exception. If you use this motor vehicle for further taxable supplies, such as 1 for further supply. Further supply means what? Supply, section 7, section 1, class A, supply includes sale, transfer, barter, exchange, lease, rental, disposal for consideration in the course or furtherance of business. Like that you have to use. Meaning what? Tesla company car you purchase for 2 crores. Pay the GST how much? 56 lakhs you paid. You want to claim ITC 56 lakhs, you should be further selling the vehicle. Buying and selling, you are in that business. No, sir, I am buying but providing renting of a cab where I am liable to pay just a forward charge. Oh, so further supply, taxable nature, ITC allowed. You get my point, sir? Otherwise, you should be in a business transportation of passengers. So purchase the vehicle using for transportation of passengers. My name is Parvin Travels Private Limited. I purchased a Tesla company car using for transportation of passengers. Can I have LTC? Yes. But I should pay GST 12% to avail the ITC. If I pay GST 5%, ITC varade, ITC won't come. You get my point, sir? Further, imparting training on driving such vehicle. Imparting training on driving such vehicle. My name is Maruti Driving School. I purchased I-10 car. Seating capacity only 4. Can I avail the ITC? Yes. Because Maruti Driving School using that providing training where the Maruti Driving School supplies are dash nature, taxable nature supplies. Liable to pay GST, ITC can be available. Now I am asking you, Bharatwaj Institute purchased Tesla car for 2 crores by paying 56 lakhs. What for they purchase? So they purchase for pickup and drop of their students, sir. Oh, very good. IT is allowed? No, excellent. Hats off to you. IT is not allowed. Because they are in the nature of commercial training and coaching. For them, black credit. Identified persons only can avail ITC. Who are they? For further supply. 2, passenger transportation. 3, training, imparting training on driving such motor vehicle. ITC allowed. Is clear? Now, if there is a case, answer to my query, please. In the given case, I said to you, the motor vehicle. Get which type of motor vehicle you visualized here? The motor vehicle is what type of motor vehicle you are looking for here. Now, I would like to bring notice. This motor vehicle, can ITC allowed? Seating capacity is less than 13. Purchased by the registered person who is a manufacturer of laptop, manufacturer of a cell phone, manufacturer of bag, like that. but not the 3 categories. Not a further supply. 2, transport passengers. 3, imparting training on driving such vehicle. Not so. In that case, he paid the GST 14 lakhs. It is allowed? Not allowed. Excellent. Now, further one step ahead. If I purchase, extended purchase, 2-wheelers. 2-wheelers, you are aware of that? Seating capacity? 2. From where you got? From RC book. Now, are you eligible to claim ITC? No. No. Even 2-wheeler, motor vehicle includes 2-wheelers. Then what is motor vehicle does not include? Means, if I say this one, is it motor vehicle? Yes, motor vehicle. But is it a motor vehicle as referred under this particular provision here, section 17, subsection 5, subsection 17, subsection 5, class A. Under that motor vehicle, we have a definition. Definition of the motor vehicle here in the material. Motor vehicle means as defined in the Motor Vehicle Act. As defined in the Motor Vehicle Act. Then what is the definition given for the Motor Vehicle Act? If you open the Motor Vehicle Act, motor vehicle, it says any motor vehicle operating the engine capacity should be more than 25 cubic centimeters, more than 25 cc. Now, this motor vehicle cc less than 25 cc, where I have purchased this engine capacity less than 25 cc. You know, you have a bike. I purchased a bike, Royal Enfield, 350 cc. You get my point, sir? Any bike is be 100 cc only, or minimum 80 like that. Less than or equal to 25 cc, such a motor vehicle is not a motor vehicle required to be registered under the Motor Vehicle Act. As long as a motor vehicle is not required to register in the Motor Vehicle Act, which is not a motor vehicle, then what is it is? Planted machinery. Can I will ITC or not? This is the question asked in the CA final examination. ITC allowed. Sir, what about this particular forklift? Seating capacity only 1, using within the premises of a particular factory. Seating capacity 1. Can avail ITC? Yes, obviously can avail ITC, because the forklift is not a motor vehicle, not required to register in the Motor Vehicle Act. Get my point, sir? Resultantly, it is called what then? Is a planted machinery. ITC fully allowed. Got the clarity, my dear? Any difficulty? Then come back. With this, we understood section 17, subsection 5, clause A. Referring to here, clause AA. Clause A. Again, here, section 17, subsection 5, clause AA. Vessel, aircraft, not allowed ITC. Block recruit. What do you mean this? Look here. Vessel and aircraft. This is a vessel, aircraft. What type of aircraft? A passenger aircraft. What type of vessel? A passenger vessel. If so, ITC is not allowed. Get my points? However, we have exception. Where and how? How to understand? If I purchase the passenger aircraft, passenger vessel with the intention to further supply, means I am buying and selling of aircraft, I am buying and selling of vessels, or I am using the vehicle aircraft for giving a rental basis, or otherwise, if I purchase the aircraft importing flying skills, means pilot training. For that purpose I purchase. Oh, very good. like a driving school. I am running flying school for giving the training pilots, for which I purchase the aircraft, or navigating skills for vessel. Vessel I purchase by giving the training how to navigate, how to take the passengers in a vessel or goods in a vessel, whatever maybe whatever may be nature. So like that, if imparting training, flying or navigating skills for the vessel, for that purpose if I purchase, I am eligible to claim ITC. Or otherwise, I am in the transportation of passenger sector. My name is SpiceJet. I purchase the aircraft. Can I avail ITC? Yes. My name is Jindal Private Limited. I purchase vessel, passenger vessel. Can I avail ITC? Yes, because I am in the nature of transportation of passengers. So for whom ITC is allowed? Vessel as well as aircraft. 1. For further supply of taxable nature. 2. Passenger transportation. 3. Training, driving, instead of driving, flying skills as well as navigating skills. Training I am providing. Then ITC allowed. Or otherwise, if these vehicles or this motor particular aircraft is no passenger aircraft, if it is a cargo flight or a cargo vessel, the vessel meant for transportation of goods, the aircraft meant for transportation of goods. Such a aircraft or vessel if I received, purchase, I can avail ITC, yes. Now I have a doubt. Bharatwaj Institute providing commercial training and coaching to budding chartered accountants, paying the GST at normal rate. They purchase one tempo for rupees 5 lakhs. GST paid 90,000. Tempo using for transporting their furniture as well as the books as well as notebooks for the students from one branch to other branch. Further they purchase tempo 5 lakh rupees. GST 90,000. It is allowed, not allowed? Absolutely allowed. If you say not allowed, where it is block credit? Block credit only for passenger transportation vehicle only. This tempo purchased by Bharatwaj Institute using for their taxable output supplies. I said they pay normal rate of GST. Are they eligible to claim ITC? Yes. Using their in the course of finance of business. Sir, if there's a case, you tell me in the given case. Bharatwaj Institute purchase this vehicle. Seating capacity is 60. For what? Pick up and drop off their students. Are they eligible to claim ITC or not? Yes. Eligible to claim ITC. This question asked in the exam of CA final. Now tomorrow they are going to ask Bharatwaj Institute purchase the tempo for rupees 5 lakhs using in the course of finance of their business, transportation of chairs, furnitures, books, textbooks, notebooks, and all. Are they eligible to claim ITC? Yes. Block credit only for passenger vehicle. Seating capacity not exceeding 13. Horsepower should be, CC should be more than 25 cc. If these conditions are there and exceptions are not there, ITC is not allowed. In the given case, this bus ITC well allowed. If they use one company purchase the bus, seating capacity more than 13 persons using for pickup and drop of their employees, ITC allowed. Nowhere block credit, my dear. எங்க block credit சொல்லுங்க பார்க்கலாம். Questions will come in the exam. Twist. I am going to the examination hall and coming back. As a result, if you sit in the examination of the question paper, feel comfortable. Yes, I know the answer. I know the answer. You have to write the answer. Oh, hold the mic, my dear. Mic, put you facing Raja. Go ahead. Ask me, ma.
For the same Tesla car where you said chartered accountant is using for client or carrying important documents pertaining to the ITC.
Correct.
Same when Bharadwaj Institute
What they purchased?
they purchased car and
Cara. Tempo, no, I said. Tempo.
Bharadwaj has purchased tempo.
Tempo. Now,
There it is.
I got it. I got it. You being a CA, practicing CA, instead of purchasing a Tesla company car, you purchase Mahindra and Mahindra goods carriage vehicle. Mahindra goods carriage vehicle. What for you purchase? You are telling, for going to client place for internal audit, I want computer, I want laptop. Get my point, sir? For internal audit, I used to be give the techniques to my people, projector I want. Therefore, all this I can carry in my bag. I want a tempo. So, using the tempo, you are going to the client place and installing all this and presenting the your profession and raising the bill rupees 10 lakhs, liable to pay GST. And coming back to your place in the tempo, bringing back. The tempo you use in the course or furtherance of your taxable output supply? Yes or no? The tempo is a passenger vehicle? No. Is a goods carriage vehicle. In that case, are you eligible to claim ITC or not? As a CA, are you eligible to claim ITC or not? Tell me. Yes, 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 and yes. Allowed. What is not blocked credit, it is allowed subject to satisfying other conditions. What is other conditions? There must be receipt of the invoice, receipt of the goods. You get my point. Other conditions should be satisfied. Get my point, sir. It is allowed. This is what I'm about to say. Only see, passenger vehicle only it is not allowed. That too seating capacity less than or equal to 13, including driver, provided the vehicle CC more than 25. It should be motor vehicle. Required to be registered under the Motor Vehicle Act. Is clear? Now I will put differently. I will make you confusion. Thereby you get correct approach. Now as you see a tempo they purchase using for their profession, eligible to claim ITC? Yes or no? Eligible to claim ITC. Granted, Raja. Now my name is DHL Courier. I purchase two-wheelers. Two-wheelers. These two-wheelers I purchase. CC capacity more than 25. Backside of the vehicle made a small dome, big box basket, where I am carrying parcels to deliver, door delivery, goods carrying in that particular box. Backside of the vehicle, two-wheeler. I am using for my profession, for my business purpose, delivering the goods at doorstep. Can I avail ITC? Can I avail ITC? My dear chartered accountants, no, I am not eligible to claim ITC. Reason, the vehicle what I have purchased, not goods carriage vehicle, I am using as a goods transport. How can you say, mister, this two-wheeler when I purchase, there must be a registration in the Motor Vehicle Act? Yes or no? There must be RC book. RC book clearly mention what? Passenger vehicle or goods carriage vehicle? Passenger vehicle 1 + 1, 2 only. Get my point, sir? That vehicle for my convenient purpose, I am using that vehicle for delivering the goods. Just because of I am using that for delivering goods, it cannot be called goods carriage vehicle. Therefore, it is not allowed. You get my point? These and all questions are not asking the final level. If they start to ask, they will definitely ask, because there is no limit. Institute said industrial practice is our syllabus, except what excluded. I said na sometime before, real estate sector excluded, transit provision excluded, section 141 has been excluded, 140, 141 excluded. That's all. The remaining all in the syllabus. Doubt? Hold the mic, please. Ask the doubt, please, Raja.
Sir, one example you gave before, sir, for chartered accountant is using a tempo. Even that is registered as passenger vehicle, sir.
Tempo, how can you register? What do you mean by tempo? I will show you. Again, there is a problem, na? Problem is coming here because my students are not visualizing what I am saying. What do you mean by tempo? Tempo means, I will show you one tempo, I will show you for your kind consideration. Then you will be able to get correctly this particular provision. I said tempo. No, further more points. Just straight away present. What is the tempo you are referring here? Listen to me. You know, we used to say kutti ane.
Okay, that's it. Okay, sir.
I will show that how it is possible. No. నాకు కామిపే నీకు సొన్నాను సొల్ల once doubt asked, for me it is a great priority to answer this. Dipare, I am talking about this. I am talking about this. If not, I am talking about this
Registered as goods only then.
goods case vehicle.
Okay, sir.
I am talking tempo means small tempo. Kutti ane.
Okay, sir.
Got the clarity, sir? Now please come back. Where we are? We are referring what? A block credit. Section 17, subsection 5, class A, we are referring. Here, what are things are not allowed as a input as credit? Passenger aircraft, thereafter passenger vessel. But the following is allowed for further supply. In the sense, if you refer here, for further supply or transport passengers, imparting training on navigating such vessel, imparting training on flying such aircraft, transportation of goods. Is clear as sir? IT is allowed. Now, when I said ITC not allowed, caps, except the few people. Now, is a premature, but you are mature enough to understand. Sir, state government of Tamil Nadu said they issued the government order, GO. Tamil Nadu government issued a GO. Says that all BPO companies functioning in Chennai city limits must mandatorily should provide pick up and drop for their employees by providing cab services. Obligation on whom? Employer to provide cab services to employees. Is get my point, sir? In that case, Wipro company approached Sharma Travels. Could you please provide your cabs on rental basis? Sharma Travel provided. Monthly charging 2 lakh rupees. GST 36,000. Is allowed as ITC or not to the recipient? Who is the recipient? Wipro or BPO company. Are the eligible claims or not? Now, in the given case, employer has the obligation under the law to provide to his employee, underline the point, to his employee by employer. Then providing cab services. Such inward service of rental of vehicles, seating capacity not exceeding 13 ITC, that time only allowed. Get my point, sir? Now, Bharadwaj Institute, a commercial training and coaching, taken on rental basis from Sharma Travel, 4 cabs, seating capacity only 5 per cab, and paying monthly 50,000 rupees rent, on which GST 18%, 9,000 rupees. Bharatwaj eligible to claim ITC? No. Why not, sir? This is an input service specifically blocked. Where blocked, sir? Section 17, subsection 5, clause B. Hey, Bharatwaj Institute, if you purchase the cab If you purchase the cab by paying the GST, can you avail ITC? I'm asking you, can you avail ITC? No. Instead of buying intelligently, you are taking the same cab on rental basis, on hire basis, on lease basis. Also be black receipt for you. Get my point? Section 17, subsection 5, section 17, subsection 5, clause B, which says that motor vehicle, vessel, aircraft taken on rental basis, lease basis, or hire basis also be not a qualified input tax credit for those for whom vehicle, vessel, aircraft not eligible for input tax credit, which I am presenting here as follows. Just look and understand. Here, if you refer, my dear, you understand. Section 17, subsection 5 is this. Class B, where you refer here, from here, leasing, renting, hiring of motor vehicle, vessel, aircraft referred to in class A. Class A means this motor vehicle. Class AA means this vessel, this aircraft, which is bracket for them. If they taken on rental basis, lease basis, hire basis, also be not qualify for ITC, bracket for them. You get my point? What I'm going to say? Bharatwaj Institute, if they purchase Tesla company car for 2 crores, GST paid 56 lakhs. Passenger seating capacity 5. Are they eligible to claim ITC? No. Instead of taking that on their own account, instead of buying, they approach, hey, Sharma Travel, you have Tesla company car? Is available. Can you renting out to us? We will pay rental charges per month, 1 lakh rupee to you. That company said, not 1 lakh, sir, 2 lakh rupees I will give you on rental basis. Tesla company car. Then they said, no problem. You please give on rental basis. Bharatwaj is paying the rent 2 lakh rupee per month. 18% GST. 36 rupees GST. Are they eligible to claim ITC? Bharatwaj Institute can claim ITC on these rental charges. Input service it is, not capital goods. Input service. Can avail ITC? No. Why not? Reason, if they purchase that vehicle, not eligible to claim ITC. Instead of buying, they taken on rental basis. Therefore, ITC is not allowed to them. Then to whom the rental service ITC is allowed means, if the Tamil Nadu government said, for example, all educational institutions mandatorily should provide cab services to their employees. So Bharatwaj Institute, being an employer, purchase the vehicle, instead of purchasing the vehicle, take a rental basis and providing to their employees pick up and drop, because obligation on him. Then ITC allow. However, because of the obligation by the government, if Bharatwaj purchase the vehicle, ITC is not allowed. ITC is allowed only when in the case where employer provide these services to their employees under an obligation, renting of a cab services, ITC. Get my point, sir? Service only ITC. If Bharatwaj Institute purchase the vehicle, passenger vehicle, seating capacity not exceeding 13, ITC not allowed. Understand that, sir? Now please come back. Further, now look here. Section 17, subsection 5, class AB. Section 17, 5, class AB. Services of general insurance. What type of general insurance? Thereafter, servicing services. Thereafter, repair and maintenance services insofar as they relate to motor vehicle, insofar as they relate to vessel, insofar as they relate to the aircraft, which is not qualified for ITC as capital goods. These services of general insurance. 2. Servicing services. 3. Repairs and maintenance also be not qualified for ITC. Example, you being a practicing CA, you purchase this Tesla company car, passenger capacity 6, 2 crores you purchase. By paying the GST how much? 56 lakhs. You have to pay insurance, no? General insurance have to pay or not? Premium paid 1 lakh rupee. Premium how much? The insurance company charged GST 18%, 18,000 rupees. Can you avail ITC? No. Why not? Tell me reason. Because the vehicle itself not qualified for ITC. On that vehicle, general insurance. On that vehicle, servicing services. On that vehicle, repairs, maintenance services. Not qualified for input tax credit. Then to whom it is input tax credit? My name is Sundar Private Limited. I used to purchase the vehicles, Tesla company vehicles, and selling the Tesla company vehicles. I am in nature of supply, further supply of taxable nature. Now I purchased 100 cars of Tesla company. I stored in my godown. What rupees? 10,000 crores. How much? 10,000 crores. The stock is available. I have to protect my stock or not? Therefore, I paid the premium of rupees 100 crores. 10,000 crores worth of the stock is there, for which I paid the 100 crores of rupees premium. On 100 crores rupees of premium, 18% GST, 18 crores. Correct? 1.8, 1.8 crores, not 18%. How much comes? 18 crores, yes, 18 crores GST. Can I have ITC? Yes, because I am in further supply where that vehicle for me is stock in trade. Get my point, sir? No, sir. I am providing rent-a-cab services, sir. I am providing rent-a-cab services. I purchased Tesla company car for 2 crores. I am paying premium 1 lakh rupee. On which GST 18%. Can I have ITC? Yes. So further supply. Renting is further supply. Sir, I am a transport of passengers, sir. My name is Parvin Travel, sir. I purchased the Tesla company car for 2 crores by paying the GST 56 lakhs. Can I have ITC? Yes. Then I am paying 1 lakh rupee premium by paying the GST thereon 18%. Namely 1 lakh, 18,000. Can I have ITC 18,000 rupees? Yes. My name is Maruti Driving School. I purchased I-10 car by paying the GST. Can I have ITC? Yes. On which general insurance company I paid premium. Can I have ITC? That is undergone service, repairs and maintenance. I pay the GST. Can I have ITC? Yes. That's what this point says. Here, provided that input tax in respect of such services shall be available where the motor vehicle, vessel or aircraft referred to in class A, class AA are used for further specified therein. What is specified therein? For further supply, transportation of passengers, imparting training, navigating, or otherwise, here I can say that transporting the goods. How to understand a vessel transporting the goods means the vessel should be a cargo vessel. Aircraft should be a cargo aircraft. You purchase a passenger vehicle and loading in that goods, it can be called as a goods carriage vehicle. It should be derived from its registration certificate or C book. Get my point, sir? Once you understand, furthermore, under the section 17, subsection 5, class AB, further I am presenting here sub point 2. In that, Roman 1, Roman 2. General insurance, repairs and maintenance, servicing services in relation to vessel, aircraft or a vehicle. Eligible to claim ITC If I am the manufacturer of that vehicle, I am a manufacturer of vessel, I am a manufacturer of that vehicle. For example, my name is Tata Motors. I am a manufacturer of nano cars. Nano car seating capacity 4 only. Now I am a manufacturer of nano car. Nano cars I have manufactured. I stuffed it in my godown. 100 are there. 1000 crores worth of the stock, for example, on which I pay the premium for loss of stock. Can I have ladies or not? Yes, yes. Why, sir? You tell me now. Bharatwaj Institute Commercial Training and Coaching for budding CS. They have the furniture stock, LCD, projectors, TV, that and this they have. What rupees? Let us say 50 lakhs. The stock 50 lakhs. They pay the premium to protect the loss of stock. Rupees, let us say 1 lakh rupee premium they paid. On 1 lakh rupee premium, they pay just 18%, 18,000. Are they eligible to claim ITC or not? Yes or no? Yes or no? Semi-qualified. They are eligible to claim ITC, Raja. It is not a vehicle. I said TV, projector, LCD, vehicle, aircraft, is a vessel? No. As long as stock in trade, so long it is allowed. It is not stock in trade, it is an asset for them. It is asset for them. Yes, correct. Only for the vehicle, vessel, aircraft. Not you are treating to generally applying. General insurance premium, generally it is allowed. Generally, ITC allowed if you use in the course of tax must apply. When not allowed means if it is in relation to vehicle, in relation to vessel, in relation to aircraft, which is not qualified for ITC, on that vehicle, on that vessel, on that aircraft, general insurance not allowed. Servicing services not allowed. Repairs and maintenance, GST paid, ITC not allowed. It's clear. One more point here. Where received by a taxable person engaged, where received by a taxable person, what is received? General insurance, servicing services, repairs and maintenance, received by a taxable person engaged in the taxable supply of general insurance services in respect of such motor vehicle, vessel, aircraft insured by him. Means reinsurance premium in relation to motor vehicle, vessel, aircraft, ITC allowed. What is this? I will show you. Just look and understand on the screen. Look, my dear sir, tell me here. In the given case, X Limited is the owner of these vehicles, owner of aircraft, vessel. All these vehicle, vessel, aircraft for X Limited taxable person is a block credit. Is clear? But he is paying what? Insurance premium. To whom? Insurance company. Now, they are the supplier, correct? They are the recipient. Insurance premium paid with a GST. That GST to them, ITC allowed, not allowed? No ITC. No ITC. Is clear? Now, this insurance company carrying the huge risk to dilute the risk. Therefore, undergoing with another insurance company by paying the premium called reinsurance premium. Now, here supplier is B Limited, insurance company, supplying insurance coverage services to A Limited, recipient, in relation to vehicle, vessel, aircraft. Now, this insurance company is your client asking you, can I avail ITC on insurance premium? Reinsurance premium I paid. Can I avail ITC? This premium ITC allowed. ITC allowed. Is clear, sir? Is clear? Now I will ask a doubt. You should answer practically, logically at final level. You are a final student, semi-qualified chartered accountant you are. Now tell me, A Limited, being insurance company, they purchase a motor vehicle seating capacity less than 13 on their own, for their own purpose, for going and coming and all. Passenger vehicle they purchase by paying rupees 10 lakhs GST 1,80,000. This 1,80,000 on this vehicle, passenger vehicle, when they purchase A Limited, are they eligible to claim ITC? Yes or no? No. Excellent. Hats off to you answer. Here, no ITC. What makes difference, no sir? This flow is exceptional nature, where service received, insurance premium service received by a taxable person engaged in the supply of general insurance services in respect of such motor vehicle, vessel, aircraft insured by him. That means one insurance company given the insurance to cover for loss of vehicles to other company, the insurance company undergoing to repay reinsurance premium to another insurance company, then that reinsurance premium may be to cover loss of stock of the vehicle with the aircraft. IT is allowed. But that insurance company A Limited, if they purchase on their own account the passenger vehicle, seating capacity not exceeding 13, which is block credit to them. Get my point, sir? Block credit to them. Got the clarity? With this, yes, any doubt? Hold the mic, please. Answer.
That's it. The example. Said the ITC allowed on reinsurance premium. But now on Schedule 3, that co-insurance is excluded from supply, no sir. Then how can B Limited will issue invoice?
I'm extremely sorry. Co-insurance premium is excluded. Co-insurance. Here I use the word reinsurance, different from co-insurance. Auditor, different from chartered accountant.
What if the reinsurance commission?
If it's a reinsurance commission, who earning the reinsurance commission? A Limited. We get, because it is the business to B Limited, therefore B Limited paying the commission. For that reinsurance commission, A Limited is a supplier. B Limited is a recipient. Is clear? For reinsurance premium, B Limited supplier, A Limited is the recipient. If the B Limited going to pay the GST on the gross premium, which includes reinsurance commission, then the reinsurance commission earned by A Limited in the given example, supply excludes Schedule 3, point number 10. Got the clarity? Now please come back. We refer so far 50% of block credit. Now referring here, section 17, subsection 5, clause B. Also block credit, what are they? Here, food and beverage and all given, na? I will show you here. What are the block credit? No, my dear friends, look here. In the given case, food and beverages, outdoor catering services, beauty treatment services, health services, plastic surgery services, cosmetic surgery services, life insurance services, health insurance services qualify for non-availment of input tax credit. Means blocked credit. Credit not allowed. Blocked credit. ITC not allowed. But exception is there. When supply of the same category of service composite supply or mixed supply are obligatory for an employer to provide the same to the employee. In all these cases, here so many points are there. One is same category supply, 2 composite supply, 3 mixed supply, 4 obligatory for an employer to provide to employee. What do you mean this? I will tell you. My name is Anna Caterer, providing catering services. All of you got the clarity. My catering services from Chennai, I am providing to TCS company Chennai. My catering services to TCS company, output supply is 5 lakh rupees per month, 5% GST. 5% GST, 5 lakh rupees, 25,000 rupees. Correct that number? 25,000 rupees. 25 rupees, na, sorry to say. 5 lakhs na, how much comes over? 25,000 coming? Yes. 25,000 rupees GST. TCS company can enable ITC? No. Black credit. Correct? Black credit. But Anna Caterers, furthermore, facing difficulty to meet the demand of the TCS company. TCS company said, hey, the Anna Caterers, your food is insufficient, man, so tasty, but we want more food. I am not having the vessels, manpower to cook. Then Anna Caterers approached Amma Caterers, asking, Amma Caterers, can you able to prepare the food and provide to us? Amma Caterers said, I am readily available with so much of vessels and all. So, Amma Caterers providing catering services to Anna Caterers. Anna Caterers ultimately providing to client TCS company. Anna Cater output supply to TCS company, black credit. Amma Caterers similar line of business, am I right or not? Provide these services to Anna Caterers, rupees 2 lakhs, 5% GST, 10,000. Can ITC allowed or not? To Anna Caterers? That means allowed. Here, similar line of business, if there, food and beverages, catering services, outdoor catering services, beauty treatment services, healthcare services, cosmetic, plastic surgery, life insurance, health insurance, it is allowed. Similar line of business. Second one, composite supply or mixed supply. That means these and all black credit. However, if the element of composite supply whose principal supply, taxable supply, ITC allowed. Sir, these are the elements form part of mixed supply, but highest rate of GST will apply for the entire supply, then ITC allowed. Sir, I am going to give the example, you won't forget even after qualifiers. Example. You are a qualified CA, Chennai based CA. Your client New Delhi. He called offer, sir, would you please come to our office and stay for a few days and provide the services to us? You said, I am coming. So you came to Delhi, where I am offering short-term accommodation to you. I am offering short-term accommodation, saying that, sir, we will pick up from airport, sir, and we will drop at our airport, sir. In our hotel, if you stay, we will provide breakfast free, sir. Breakfast free. Pick up and drop free. Breakfast free. Room rent, accommodation per day per room, just rupees 5,000 only. It includes all the three. Now, is a composite supply or a mixed supply? Am I providing in the ordinary course of a business? Not in the ordinary course of a business. Hotel wala will provide in their ordinary course of business food or not. And if you offer pick up and drop services, more hospitality, you feel comfortable. The moment you get on at airport at New Delhi, your nameplate holding a person standing, Mr. Venkatraman, chartered accountant, welcome to Delhi. Then by seeing that, yes, I am Venkatraman. You go there or not? So, need not want to find a new place, not required to face any difficulties. for which the hotel wala says, you just pay rupees 5,000, we'll take care of you. We'll pick up from airport. When you going to go to airport, we'll drop at airport. During the stay, we'll provide to you breakfast free. Food and beverages free. Is ordinary course of my business only. In that case, 3 elements. 1, food and beverages. 2, pick up and drop. 3, short-term accommodation. Composite supply. Predominant element is what? Renting of room, namely short-term accommodation. The rate applies in the given case 12%, for example. 12% of rupees 5,000. If so, that particular hotel was asking you, sir, outdoor catering, food we provided from getting outdoor by paying the GST thereon. Can I have an ITC? Yes, is eligible to have an ITC because it is one of the element in the composite supply. My output supply is taxable supply. ITC is allowed. Now one more point I said. I pick up you from airport. I drop you at airport. It is not my own car. I taken on rental basis. I taken on rental basis. If I purchase the motor vehicle, passenger vehicle, seating capacity not exceeding 30, ITC not allowed for hotel wala. If so, he taken a rental basis. Also ITC not allowed. But if the renting of a cab is element of composite supply, is element of mixed supply, is output taxable supply, it is allowed. That means hotel will also can claim ITC on the pickup and drop sales point to customer where he taken rental basis the vehicle on the rent GST eligible to claim ITC. Get my point, sir? Further, obligatory for an employer to provide to the employee. What do you mean this? I am running a factory which is outskirts of the Chennai, far away from Chennai. There won't be any near tea stall also not available. Inspector of factory visited the factory and said, hey Mr. Employer, your factory covered in the Factories Act, where mandatorily you have to provide catering services to the employees working here. If not, next visit of mine, if I found no canteen, I will penalize you. Notice issued in gone. Now tell me, for an employer, is it obligatory to provide to employee? Yes or no? Yes. Thereby, I approached Anna caterers, yeah, please provide catering services to our factory. There I paid the GST. Can I have an ITC or not? Yes, obviously can I have an ITC. It's obligatory for an employer to provide an employee. Now I have a doubt. Statutory auditors went to the factory where this particular factory owner laid down the red carpet to you people, taking care, greater care, and the food is provided from 5-star hotel. Catering is provided from 5-star hotel. It is allowed, not allowed? Not allowed, you are not employee. Understand. Employer should provide to employee, which is obligatory to provide. What are they? Food and beverages, outdoor catering services, beauty treatment services, healthcare services, cosmetic, plastic surgery services, life insurance services, health insurance services. Further, referring here, coming to here, membership of a club services or health and fitness services. Yes, my dear friends, online students, my humble request, please mute your mic and listen, my dear. Further, leave or home travel services offered by the employer to employee, whatever may be. In the given case, blocked credit. Unless it is an obligatory for the employer to provide to employee. Example, Tamil Nadu state government said all software companies mandatorily should provide to their employees club services because they are working 24 hours sitting in front of the computer and do the night also they are like that they are making because of hard workers. So Saturday, Sunday leave, during the leave time, you please provide facility of what? Club services. As a result, as an employer, I took Mahindra and Mahindra Club membership. Worth is membership fees there is 5 lakh rupees. By showing the membership that card, my employees can go there, weekends can enjoy, refreshment themselves and rejuvenate themselves and come to the office on Monday. So that purpose I provided. 5 lakh rupees I paid the membership fees. It's obligatory to provide to employee by employer, where I paid 80% GST, 90,000 rupees. Can I have an ITC? Yes, it is allowed. Is clear. But one thing is clear: membership of a club, health and fitness services, leave or whole travel. Here, only obligatory for an employer to provide to employee, then only it is allowed. There is no element of mixed supply, combo supply, and are not there. Only here only it is there. Here 4 points are there, but here only 1 point. Cook sound because not noticed. It is coming here. Shiva Kumari, please mute your mic. Emma Shiva Kumari, mute your mic, Raja. Because what happened here, noise coming, sound reflecting, resound coming. Yes, please mute it, please. When you want to speak with us, unmute and speak. Got the clarity, my dear friends? We are halfway through of what? Blocked credit. Blocked credit, furthermore referring here. Works contract service. Works contract service in relation to construction of an immovable property. Works contract service in relation to construction of an immovable property. Then ITC blocked credit. How to understand? Look here. A Limited want to construct the factory building which is not a plant and machinery. Sir, again I am telling you, section 17, subsection 5, clause C talks about works contract service. Works contract service, when supplied for construction of an immovable property, I am using the word construction of an immovable property, where labor and material goes hand in hand, other than plant and machinery. Means if it's a plant and machinery, works contract in relation to plant and machinery, ITC is allowed. Works contract in relation to plant and machinery, ITC is allowed. Works contract in relation to construction of immovable property, ITC is not allowed. Now, what is a plant and machinery? Anything other than the following: civil structure, meaning this one, not a plant and machinery. Second point, pipelines laid down outside the factory premises. Pipelines laid down outside the factory premises. Third one, cell towers. Cell tower, telecommunication cell towers, not a plant and machinery. Pipelines laid down outside the factory, not a plant and machinery. Civil structure, what is there on the screen? Civil construction is not a plant and machinery. Then anything other than that is a plant and machinery. What do you mean that plant and machinery? Look on the screen. This is a plant and machinery. This is called plant and machinery. For example, works contract services In relation to plant and machinery, ITC allowed. For example, this is a hot mix machine. Unless it is attached on the land with the bolts and nuts, it has high vibration. If I operate it without attaching on the land, by vibrating, it is going to fall on us. Therefore, I wanted to have the particular foundation structures for which I appointed to construct the foundation structures to a person. Other person providing to me cement, sand, iron with the labor, works contract, service rendered to me. This construction has been laid down. On that, I have been attached my plant and machinery. Now, works contract service in relation to this foundation structure for supporting structure for plant and machinery, supporting structure for plant and machinery. IT is allowed or not allowed? Allowed. Works contract services in relation to plant and machinery, ITC allowed. Works contract services in relation to construction of an immobile property, ITC not allowed. Then what is not a plant and machinery? 1. Civil structure. 2. Telecommunication towers. 3. Pipelines laid down outside that factory premises. In these 3 cases, ITC is not allowed. Now you tell me, in the given case, works contractor provide the works contract service to A Limited for constructing this particular building, civil structure. Supplier, B Limited. Recipient, A Limited. Nature of supply, works contract. IT is allowed to A Limited? No, that's it. Perfect. Excellent. Is clear? Now, here, one more exception is there. What is the exception? If in the similar line of business, one works contractor provide the works contract services to another works contractor and another works contractor ultimately provide to end user. Example. Here, example. You know, A can't avail IDC, correct? Yes, is clear. Now, B Limited taking this works contract services by outsourcing to others, to C Limited. C Limited provider of service to B Limited. Now, C Limited providing works contract service to B Limited. B Limited can avail IDC? Yes or no? Yes. B Limited can avail the ITC. Similar line of service. Got the clarity? Coming to section 17, subsection 5, clause D. Sir, what do you mean by works contract? Labor, material goes hand in hand. This is a works contract. If material is eliminated, only labor provided, not works contract. Therefore, A Limited here appointed B Limited, somebody else, only to provide labor for construction, and A Limited intelligently buying on their own material, cement, sand, iron, rods and all. Now, A Limited smartly acting to avail the ITC, saying that not a works contract. If you are a smart being taxpayer, department more smart than you, department says, if you receive the input services in relation to construction of an immobile property which is other than plant and machinery, also ITC not allowed. You are end user man. Can I tell one important point to you? My name is DLF. Who am I? Builder. DLF provided works contract services to A Limited. IT is not allowed to A Limited, correct? If A Limited purchase their own all material, ask the DLF to provide only service, that also will not qualify for ITC to A Limited. Is clear? Because A Limited is using for construction of movable property which is not plant machinery. Correct? Now, DLF Limited, while providing work contract service, for example, if we outsource to CDS company, this work contract, CDS wala providing to DLF work contract, DLF providing to A Limited. Now, output supply of CDS as work contract is qualified for ITC to DLF Limited? Yes. All are clear? Now I am asking a doubt. This question is going to come in the exam. My name is DLF. I want to have an office. I want to have an office. Where? In Chennai. I have my own land office. I want to construct. I approach it. Hey CDS, could you please construct for me office premises? CDS was said, I will provide work contract to you. Because land is owned by DLF. CDS was providing labor and material. To whom? DLF. DLF is a work contractor, but he is taking as an end user what? This particular office premises. Now, output supply of work contract of CDS to DLF, ITC allowed to DLF? No, excellent, there you are. Because for DLF, this premises is not a plant and machinery. Get my point, sir. Get my point, sir. If the DLF is going to be provided to others, is in business, his inward supply, similar nature of business, it is allowed. If himself is end user, then IT is not allowed to him. Get my points? As simple as that. In the given case, if A Limited received only labor and on own account purchased the material for construction of a immovable property which is not a plant machinery, for him the labor output supply as well as cement or iron what he purchased A Limited not qualify for ITC. ITC not allowed to A Limited. Got the clarity? Likewise, section 17 subsection E, which says that D is over E, you are as a composition taxpayer. We are already aware of this. In the first class we discussed it. Composition taxpayer not eligible to claim ITC. Then he purchased the goods by payment of GST. ITC is not allowed for him. He has to pay the tax from his pocket and issue dash bill of supply, not tax invoice. Got the clarity? Like that. Sometimes before I too referred, composition taxpayer, composition scheme, section 10 of CGST, not applicable to non-resident taxable person. Who is he? Came from outside India into India, not holding any PAN number in India, not having place of business in India. That person providing services to any person in India or supply the goods in India. For him, registration mandatory. He is not eligible for composition scheme. He is also be not eligible to claim ITC. Not eligible to claim ITC. Except one ITC. On account of import of goods, if you paid IGST, that IGST on import of goods only ITC allowed. If you procure the goods in India, resources in India, no ITC. Only on import of goods, he paid IGST, that alone qualify for ITC in India to a non-taxable online recipient. Is clear, my dear friends? Further, here one important point I want to bring notice. Class FA, section 17, section 5, clause FA. If a taxable person, a registered person who received goods or services by payment of GST to meet corporate social responsibility CSR as per the section 135 of the Companies Act 2013. The expenditure incurred for CSR purpose and with GST, ITC not allowed. Black rate. Example, you are aware of that? Which company is responsible to create a fund called CSR fund? Mandatory. A small percentage on the profit. If no profit, no CSR. Now my company is profit, amma. 2% of my profit. I create a fund which is 50 lakh rupees. How much? From that fund 50 lakh rupees, I spend 10 lakh rupees to purchase laptops. How many laptops I purchase? 100 laptops I purchase. All these 100 laptops I am giving to a particular society which is providing free education. Section 12A, 12AB, income tax registered person. To them 100 laptops is given. They purchase and given. When they purchase, they got an invoice. 100 laptops, 10 lakh rupees, just 18%, 1 lakh, 80 rupees. Are they eligible to claim ITC? No. Because the expenditure out of CSR fund is a black credit. Get my point, sir? Further, class G. Goods are used for both taxable as well as personal purposes. Goods are used for personal purposes. If personal purposes, it is not allowed. For example, look here. If I purchase paint by paying the GST, used for office purpose, building premises, painting, official purposes, can I have an ITC? Yes. If I use the same paint, royal paint, as MD, I purchase from the company name by paying the GST so much. I use the paint for my bedroom. See, same paint, same color. I use in the bedroom. Means what? Personal purposes. ITC not allowed. This 1 lakh 28 is not allowed. Black credit. ITC not allowed. Is clear, my dear friends? Now come back. Any doubt? 1 minute. Ask the doubt. Yes.
Sir, suppose this paint is used for both purposes, sir. Same paint used for both office as well as personal purpose, for business purpose as well as personal purpose.
Inputs. Common input tax credit. Common input. Common input tax credit. Common credit multiply by
Multiply
exempt supply
by total.
divided by total supply. Here, excellent doubt. Hats off to you for asking this doubt. Reason I appreciate this doubt because there is one point I have not covered when I discussed section 17 subsection 2. Read with section 17 subsection 3 along with rule number 42, 43. You ask the doubt. Then this point, no, 1 or 2, if I overlook, will bring to notice. That's why I encourage you people to ask the doubt. I'm very thankful to you, my dear. Here, I use for personal purposes, correct? Sometimes that quantum of personal purposes difficult to arrive in terms of value. Understand, sir? Sometimes difficult for me. Common input, sir. While using for my product, some of the product I use for personal consumption. Some of the thing taxable supply. When you bifurcate taxable as well as exempted nature or non-business purpose, the non-business purpose, what is that non-business purpose? Quantification difficult. One example, Amma. I am a manufacturer of nail polishes. Beauty, sweetie, thereafter cutie. Beauty, sweetie, cutie, nail polishes. I am a manufacturer. Taxable. One fine day, Mrs. Rafi came to the factory along with her friends, Mahila Mandal. They all of them took two bottles. Some of them they use on their fingernails as well as for legs also. Some of the bottles consumed there itself. Some of the bottles they took along with them as a gift. My factory manager told, sir, madam came, this much of a quantum has been used, and further so much of quantity we applied on the nails, that exactly how much we do not know, sir. That means what? Something used for non-business, non possible to quantify, not possible to quantify, but common credit is there. Common credit for taxable, common credit for non-business. At that situation, from the common credit, 5%, how much? 5% is treated as a for that particular non-business purpose. Provision is there. I will show you right now the provision. That is important. That point I should have been say that. It came to my mind there. Okay, that much of people not going to ask any doubt. But you have been asked a doubt, therefore I am bringing that to your notice. If the goods are used for non-business, the parent computing proportionate amount attributable to use for non-business purpose, then if input services have been used for the purpose of non-business, then applying how much quantity for non-business not possible to identify, then 5% of common input services will be treated as reversal purpose, means a non-business purpose. This point very important from the exam point of view. VVIMP. Get my point, page number 309. Your workbook. I mean, what not workbook? Handbook. Volume 1. Page number 309. Is clear, sir? Now please come back. Where we are? We are referring block credit. Now, furthermore, if the block credit comes into picture, here,
So you will take 100% ITC and then add 5% in common.
not audible. Mic henge. If you have a mic only, ask. If not having the mic, then you get the mic and ask. 1 minute wait. Let me complete this particular way. I have to go to the point. Na? This point I will go and you please ask the doubt. We are in the process of discussing what? Block credit. Cut Raja. Now tell me, Amma. I think it is not triggering light. Triggered? No speak.
Said goods or services are both used for personal consumption, where you cannot derive what percent exactly it is. You will treat 100% as ITC and then add 5%
I'll output as liability.
logged credit in your output tax.
Correct. Correct. Take the credit common credit fully and add back 5% of common credit towards non-business purpose. You have to have a bookkeeping properly. Now, here, class H, 2 section 17, section 5, goods lost, stolen, destroyed, written off, disposed of by gift, free sample, ITC, not allowed. Example, I have manufactured in my factory beautiful cars in Bangalore. Color cars are manufactured. Is output, is my finished goods, for which I have my inputs, so much paying the GST. Before selling that goods in the factory, there is a short circuit taken place, got in the fire. All the goods have become a husk and dust. Single rupee not recoverable. I have to spend the money to clean that area. I have to spend the money to clean that area. In that case, can I avail ITC? No. Block credit. Section 17, section 5, class H. Sir, my name is Reddy Labs. I developed a new medicine, new cough syrup, a new product, no side effects. I want to sell in the market. People won't buy unless people are aware of it. Therefore, I am distributing across the India through hospitals freely. Can I have ITC? No, because bad create. One more logically, anybody say? Logically, anybody say? Logically, why not create? Logically, there is no cascading effect of tax. ITC is only given to eliminate cascading effect of tax. I purchase the goods, Raja, by payment of GST. When I am going to sell, again I am going to pay the GST. Cascading is coming to eliminate that ITC is given. When I am going to sell, I have not sold it. I sold for zero consideration. Not a schedule 1 transaction, not a supply. I am not going to pay any GST. If I am not going to pay any GST, the GST paid inward supply, ITC, logically whole good, na? That only we are putting here as a section. Section 17, subsection 5, clause H. Is clear? Thereafter, clause I, the last provision of this particular block crate. Here amendment also taking place, I will refer this. Any tax paid in accordance with provisions of fraud. Fraud is now considered or non-fraud as the case may be. Section 74 capital A with effect from 1st November 2024. Detention seizure, which is section 129. Confiscation, which is 130. I will tell you, I will make you understand this point first. Fraud. Fraud means what? Intention not to pay. I have guilty mind. Suppression of facts. Evasion of tax. These and all symptoms for fraud. Acting fraudulently, I have not paid the tax. Example. I supplied goods to my buyer, not issue the invoice. Supply of goods without issue of invoice, offense. Thereby not pay the tax. Department, by conducting the audit in the books of the buyer, buyer stock, physical stock more than the stock available in the register. Department asked, hey mister, this much of stock from where you got? Sir, that gentleman sent to me without issuing a tax invoice. Who is gentleman sitting here? Then department said, hey mister, on so and so date, you supply the goods without issue of invoice. Why? I said, I have not issued the goods. Department came for investigation. By conducting the investigation, by putting so much efforts, finally they detected me. Yes, you have been committed the fraud. Padya, all evidence you have been evaded. All evidence you have been removed. In spite of that, GST intelligence team catch hold this by investigation. This my intention what? Clearly shows evasion of tax. Fraud. Pay the tax now with the interest penalty. What I can do? I accept it. I pay the tax. How much pay the tax? Let us say 18 lakhs. And interest also paid, penalty also paid. 18 lakhs tax I paid. Only after detection of fraud, then I pay the tax. Whatever I pay the tax, I am raising the debit note. Hey buyer, tax credited. I pay the tax, you pay the amount to me. Like that, this seller issues the debit note to the buyer. Buyer, gentleman, pay the tax to seller. Now the buyer, who is gentleman, pay the tax to seller. After seller paid the tax, after detecting the fraud, after detecting the fraud by the department, seller pay the tax. That tax he passed it on to buyer. Now buyer can avail ITC. Yeah, no. For a buyer, you are not eligible to claim ITC because your seller paid the tax. How he paid the tax? Paid tax under section 74A, acting fraudulently, not paid the tax. After that, after deducting that fraud, he paid the tax. Such a tax not eligible to claim ITC. Buyer says, why not? Refer section 41. Refer section 41, where it says that self-assessment tax credit only allowed. What do you mean by self-assessment tax? I myself compute the liability, I myself pay the tax to department, and that is called self-assessment tax. If so, my buyer eligible to claim ITC of that. Get my point, sir? And moreover, be careful. This seller going to pay tax, sir? When this seller going to pay the tax under section 74 capital A, acting fraudulently not paid cases, correct? If that tax I am going to pay to department, I am not eligible to claim my credit also. You get my point? I am not eligible to claim my credit. I have to pay alternate cash ledger. That amount of tax paid to department, I can pass as a credit to my buyer. Second case, detention seizure, section 129. What do you mean by detention and seizure? Which is entirely different from confiscation. Section 129 talks about detention seizure. When I am carrying the goods on road, national highway, from Chennai to Coimbatore, I am carrying in a truck huge amount of goods. Department, flying squad, detained during transit. Hey, stop the vehicle. I stop the vehicle. What the goods are carrying? Sir, the goods are so and so furniture, sir. Worth how much? 15 lakhs, sir. Invoice is there, sir. Tax invoice. Where is the e-way bill? E-way bill not there. Non-availability e-way bill, where the department office is empowered to detain and seize the vehicle. Department seizes the vehicle. You pay the penalty. How much penalty? For taxable goods, owner come forward to pay the tax. 200% of tax. How much? 200% of tax. 15 lakhs, Raja. For example, GST is 2,70,000. 200% means 5,40,000. Penalty only I have to pay to release that goods. Then I pay the tax. How much? 2,70,000 I pay the tax. Such a tax paid by me, where the recipient of that goods not eligible to claim ITC. Get my point, sir? ITC for recipient. ITC for recipient. Recipient can't avail ITC. And moreover, when he is going to pay the tax, under section 129, now 129 not related to tax. Tax repayment not required to release the seized goods. That means the link of payment of tax removed from section 129. It is sufficient to pay penalty. If you pay penalty, sufficient. The penalty what I paid, penalty never qualify for ITC forever. After that, if I pay the tax paid by me is under what process? Under section 74 fraudulently, ITC is not allowed to buyer. If not a fraud case, yes, that time only ITC is allowed to the buyer. Is clear, sir? A detailed study on this particular such as the seizure, detention and seizure will be referred to you separately under the chapter called as offences and penalties. Section 129 deals with this. Coming to section 130. 130 is nothing but what? Confiscation of the goods. If the confiscation taken place, ownership on the goods shifting from the owner to department, where the department is permitting to pay fine in lieu of confiscation. Then I pay the tax to department. That means I pay the fine to department. and subsequently I am paying the tax of the department. If the tax paid by me acting fraudulently, ITC is not allowed. If not fraud, ITC is allowed. Is clear, sir? Simple to say, input tax credit not allowed if you are not under the self-assessment tax credit. The tax credit should be have to have self-assessment tax credit, only allowed to utilize for payment of self-assessment tax on output supply. As simple as that. Self-assessment tax credit is allowed to avail as ITC while paying the GST under the self-assessment tax. These are not self-assessment tax, reassessment tax. This is a reassessment tax. Got the clarity, sir? With this, section 17, blocked credit concept 17.5, block credit is completed. As a whole, how many subsections are there? 5 subsections completed. So, section 16 over, section 17 over. Now we have section 18 to look ahead, which is very important, special circumstances to avail the ITC. That will take up after having 10 minutes break from now. Is clear, Rahman? Just 10 minutes break from now. என்னமா
ஒண்ணுமே இல்லை, பேட்டரி மட்டும் சர்க்யூட்லாம் செக் பண்ணா நல்லா தான் இருக்கு எல்லாமே. எல்லாம் செக் பண்ணிட்டேன். உள்ளுக்குள்ள மட்டும் பேட்டரி மாதிரி சார்ஜ் பண்ணலாம். பேட்டரி மட்டும் உங்க மொபைல்ல இதில் வந்து
எவ்வளோ ஆச்சு?
200. லஞ்ச் என்ன அதான் வாங்கிட்டேன்னா அப்புறம் கார்
நான் சொல்லுங்க, நான் என்ன இருக்கேன்
கிளாஸ் போனேன். போட வேண்டாம்
இல்லை எப்போதுமே லஞ்ச் பேக்கில் பிடிக்கும்.
இது யூஸ் பண்ணுறீங்களா?
லஞ்ச் பேக்கில் பிடிக்கும். Yes, sir. Start. வாங்க வாங்க. We start, Amma. Yes. We'll continue. Rough and you now, section 18 of CGST, where the title itself is special circumstances. What do you mean the special circumstances? Sir, I started my business 1st April 2025. My turnover 0, not after registration. 30th June 2025, I came to know that my turnover 20 lakhs. I am a supplier of service. I applied for registration. When? 1st of July. I obtained the certificate of registration 7th of July. Now, my point here is, I have certain purchases in the month of April, May, June, during the non-registration period. These invoices on which I paid the GST, and I use these goods for my output taxable supplies. Can I avail the purchase made by me prior to my registration? After having registration, can I avail ITC? The law here says yes. Section 18, subsection 1, clause A says that if you obtain the certificate of registration within 30 days from the date of need arises, then in that case, immediately preceding the date from where you become liable for registration, as on that date, the inputs, only inputs I am referring, not capital goods, not input services, input goods on which GST, ITC credit is allowed, with one condition, that invoice, documentary evidence to avail ITC should not be older than 1 year from the date of invoice till the date availing ITC, as per section 18 subsection 2. So the invoice should not be time barred invoice, and the invoice pertaining to input goods ITC is allowed after having registration. Is clear as 18(1)(b), voluntarily obtain the registration. Sir, I incorporate today, sir, 7th August 2025. Today only incorporated. My turnover in the previous is 0, sir. Current year also 0, sir. Today only incorporated, sir. The day in which incorporated, I want to go for registration voluntarily. Allowed? Well allowed. In that case, if I made application today itself voluntarily for the want of registration, they granted the registration to me on 10th of August. Now, before the 10th of August, I have made some purchases, only input goods, on which GST I paid. Can I avail ITC? The law of the land here says yes, provided just ensure that input goods on which GST allowed as ITC, for which invoice should not be older than 1 year from the date of invoice till the date availing ITC. Got the clarity, my dear? 18(1)(c). What do you mean by 18(1)(c)? Person who ceases to pay composition tax, meaning therefore, so far I am composition taxpayer. Today, my turnover exceeded the threshold limit for composition scheme. With immediate effect, I should switch over to regular scheme and inform to department within 7 days from the date of need damages withdrawal of composition scheme in the form GST CMP 04. You get my point, sir? Within 7 days, I have to apply withdrawal of composition scheme intimation, but I should apply non-regular scheme with immediate effect. Get my point, sir? If so, I am ceases to become a composition taxpayer. From the day one, I ceases to become a composition taxpayer. I am a regular taxpayer. Can I have ITC? Yes. If so, as per section 18, subsection 1, clause C, it says not only input goods credit but also capital goods credit if we have prior to the date of ceases to become composition taxpayer, ITC is allowed. But the input goods, the capital goods on which input tax credit, ITC, invoice should not be older than 1 year from the date of purchase, from the date of invoice till the date of availing ITC. Now, with regard to input goods, ITC allowed. With regard to capital goods which you procured prior to date of ceases to become composition taxpayer, correct? That means during the composition tax period, you purchase asset. Quite for some time, the asset has been used for composition scheme. Now only you are switching over to regular scheme because there is a threshold limit exceeded. Therefore, for the past period, ITC and capital goods proportionately disallowed. The balance only allowed. How can I take into previous period proportionate, sir? Simple. 5% per quarter. Part of the quarter is a full quarter. From the date of invoice till the date of ceases to become a composition scheme. That much quarters, 5% per quarter, straight-line basis, reduce the credit. Balance credit is allowed on capital goods. Whereas input goods, IT is allowed straight away. Get my point, sir? This question has been asked in the examination, already there in the RTP, in the recent past, again repeated in the RTP, that much important. Ceases to become a composition taxpayer. ITC prior to the date of ceases to become a composition taxpayer, allowed? Allowed. Only on input goods and capital goods. Now you tell me, a composition taxpayer also a registered person? Yes or no? He is a registered person, but paying the tax in a composition scheme. Therefore, not only ITC. Those purchases, that period purchases of input goods, capital goods, ITC allowed after you cease to become a composition taxpayer. Is clear? But 18(1)(a), you are not a registered person. Now only you apply for registration. 18(1)(b), you are not a registered person. Now only you apply for registration. In that case, only input goods qualify for ITC. If you purchase before obtaining certificate of registration, only input goods qualify for ITC. 18(1)(c) is not so. You are a registered person, but on a composition scheme. That time you purchase the goods, not eligible to claim ITC, not available ITC. Now you become a ceases to become a composition taxpayer, means regular scheme. Can I have ITC? Yes. What are the things? Input goods, credit allowed, capital goods credit also allowed, but capital goods credit by forget. During the composition tax period, how many quarters? Per quarter, 5%. Part of the quarter also, full quarter. Reduce, balance ITC is allowed. That you have to intimate department inform ITC 01 within 30 days from the date event occurred. This point I referred under composition scheme. You people are there, ma first class? First class, composition scheme. I refer this. It's clear, Raja? Doubt now? Hold the mic, please. There's advantage coming to the live class, face-to-face class, half-time class. Directly you can ask. You can fight with me, maintain the distance in the subject, Raja. But online, no. Distance is a distance. Yes, ask me, Dr. Raja. Check the mic, please. Check the mic.
Hello?
Now okay.
Sir, composition scheme has 3 layers, sir. Traders, manufacturer, restaurant service. So, here it's given that composition can claim only on input goods and capital goods. Then what about restaurant service, sir?
First of all, input service credit cannot be availed at all in any one of the subclass of this. Reason for input goods, we have a quantity, opening balance, work in progress, closing balance, tangible nature. Capital goods, tangible nature. Input service, no opening balance, no closing balance, intangible nature. ITC or inputs is not allowed even under section 18(1)(c). Only input goods and capital goods. But I am a service provider. I am a restaurant service provider. For example, I am willing to pay GST at 12% to avail the full ITC. In that case, input goods, capital goods can be allowed for me. Get my point, sir? As a service provider, I can avail ITC or input goods, capital goods. Yes. For CA, so for composition scheme, paying GST 3%, CGST 3% GST, now become a normal regular scheme. You are service provider. Can I avail ITC on input goods, input services, not input goods and capital goods, not input services. What is input goods? Sir, input goods are like consumables, sir. Pen, paper, pen, ink, eraser, input goods. Capital goods, laptop, systems, and computer capital goods. It is allowed. But anyhow, input goods, capital goods only it is allowed. But not an input service credit not allowed. Input as credit is allowed on input services only after having registration. You get my point, sir? Now come back. What you understand under 18(1)(c), same as 18(1)(d). Mutandis is applicable. Only the person is different. 18(1)(c), composition taxpayer now become a regular taxpayer. 18(1)(d) is also a registered person. He has 2 units. Unit 1, taxable supply. Unit B, exempt supply. Now, if Unit B providing exclusively, wholly exempted supply, are they eligible to claim ITC? No. So far they are not claim ITC. Now what happened? Exemption to the Unit B withdrawn. As a result, can I avail ITC? Yes, because I am paying the GST for Unit B. I can avail ITC. Now on what? On input goods and capital goods. But under 18(1)(c), 18(1)(d), Here also registered person, here also registered person. 18(1)(d) also registered person. Suppose 18(1)(d) applicable or not, you tell me. I am an unregistered person. I am a unregistered. Why unregistered person? So far my supply exempted supply. So far exempt supply, Raja. I have not paid any tax. Wholly exempt. Only one unit I have, which is exempt supply. Turnover how much you know? Turnover 80 lakhs. Wholly exempt supply. For me, registration not required. Section 23, subsection 1. Section 23, subsection 1 very clearly says that if you are exclusively supplying wholly exempted supplies, not liable for registration. Therefore, I have not applied registration. Now what happened? My entire supply became taxable. Then I apply for registration. Now, in that case, I am going to be fall to avail ITC under 18(1)(a), 18(1)(a) or 18(1)(d), 18(1)(a) only. There is a mistake which has been taken place in the RTP of the CA Institute. They wrongly applied, incorrectly applied section 18(1)(d). Exempted supply became taxable. Thereafter, they rectified that RTP question. Subsequent RTP, they given same question by modification. You get my points? That modified problem I am going to do now. If you are a wholly exempt supply, not registered, then you now going for registration because exemption withdrawn. 18(1)(a), where ITC on input goods only allowed, not on capital goods. Sir, I am a registered person, sir. I have unit A taxable, unit B exempt, sir. I am a registered person, sir. I have purchased input goods to use unit B. I have purchased capital goods to use unit B. Exempt supply. IT is not available. Now what happened? Unit B supply output became taxable. Exemption withdrawn to me. Then I am not applying for registration. I am a registered person. I am going to pay the tax. That time 18(1)(d) apply, where I am eligible to avail ITC on input goods as well as capital goods. A problem on this is as follows. Numeric problem. From the workbooks, my dear sir. Today morning I send a part 2 for your kind consideration. section this one, no? An excellent problem from RTP, which is there in the material. Somebody asked me, out, so the workbook is sufficient for the exam point of view, September 25. Highly sufficient. And the student asked, I am not referring CA Institute material, neither study material nor search answers or RTPs. Not required. I am telling you not required because all those things I covered already. Your study material, your RTP, your past exam questions, your MTP, MTP, mock test paper in online, that also I covered. Therefore, solid enough. That's why it became a 350 plus numeric examples. For me, it became difficult to trace this particular content correctly. Yes, no problem. What I will do here is straight away take the problem from the source material. You get it now. Yes, is a problem. RTP problem, my dear friends, this one. See, I given the citation RTP 18, 2018 and 19, but two places appeared. But anyhow, this problem, exact problem is there in our workbook. I change the names. When I take into RTP, from the RTP, exactly cannot copy, no? You will say, hey, don't violate the copyrights. I can easily violate the copyrights without violating copyrights. How? Take the same problem, change the name, change the value, change the time, change the place. This is what I did, sir. Sir, is it my own creativity? Absolutely not. I should not do that with my own creativity. Yes or no? What the law speaks, only have to speak in a simplified manner. So, in this process, reading as follows. S&P Private Limited, Coimbatore, exclusively manufactures and sells product Jet, which is exempt from GST, white so and so notification and relevant legislations. The company sells Jet only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year. Owing to the growing demand for the product, the company decided to increase its production capacity and purchase the additional machinery for manufacturing Jet on 1st July. The purchase price of the capital goods was 20 lakh rupees, exclusive of GST 18%. However, effective from 1st November, the exemption available to Jet was withdrawn. by the central government and the GST 12% was imposed thereon. The turnover of the company for the half year ended on 30th September was 40 lakhs. The board of directors of S&P Private Limited wants to know the following. 1. Whether they have to register the GST. B. Whether they can take input tax credit and machinery purchased. If yes, then how much credit can be availed? Advise the board of directors S&P on the above issue with reference to the penal GST law. Now, this question appeared here 2 times in RTP. You tell me, falls under, first of all, are they required registration? Yes, because exceeded 40 lakhs in the previous year itself. Then why not registered? Exempted. Now became taxable. Aggregate turnover, which includes taxable as well as exempted, which is exceed 40 lakhs. Therefore, liable for registration. Yes, you have to say first case. Yes, liable for registration. Then whether they can take the input tax credit or the machinery. Under which category they come under category? Under section 18(1)(a) or 18(1)(d). You tell me. 18(1) perfectly correct. Not under 18(1)(d) is clear. Therefore, not eligible to claim ITC on capital goods. Is clear. Here 18(1)(a). Therefore, not eligible to claim ITC. Is clear. After that, one more problem is appeared in the recent RTP. Gautam, same is what is in the name of a Gautam. This is RTP. Which RTP? 23. Earlier one is RTP. I said no, S&P. That time, if you refer the RTP, the RTP incorrect answer. They said 18(1)(d) apply. Why I am telling you no, sir? If you are referring the previous question papers, previous RTPs, good. If it is updated, that's why I am telling you. You please refer my material. My material is nothing but fully, wholly copied from Institute material only. Institute copied from Bare Act only. Get my point, sir. Therefore, you trust and go. Only thing is, there may be, as a human being, there may be computation error. 2 plus 2 equal to 5, I might have mentioned. Rare are the rares. By looking itself, we can say, it is a computation error. You want to clarify? My WhatsApp number is there. My number is there. In each and every page of my material is there. If you refer each and every page, my number. If you call, directly come to my mobile only. Personal number, not giving my manager number and all. You directly can call me. I'm responsible to you. You get my points? Any doubt now? You please call this number. Or you can send the WhatsApp, best way. I will repeat again. 18(1)(a) is what? 18(1)(a), I have not registered. Why not registered? Turnover not exceeded, sir. Registration not required, sir. Okay. Now turnover how much? 40 lakhs, sir. You have to go for registration. In the same financial year, don't wait for the next year. Always you refer the previous year, Raja. Previous year 0. In the current year not registered. But you start the business. In the current year, till today, what is the turnover? Sir, 40 lakhs, sir. Then after that, even single rupee if you supply, liable to pay GST. Is clear? But I have not registered, sir, because entire 40 lakhs exempt, sir. Entire 40 lakhs are exempted. Entire turnover is exempted. Not liable for GST. Section 23(1) says. Now, in the current financial year which I incorporated, my turnover 55 lakhs, fully exempted. Registration not required. So, with that, I enter the next year. In the next year, my turnover how much? 40 lakhs. All are exempted. In the next year, till 40 lakhs of my turnover also not registered. But in the next year, on one particular date, I came to know that my exemption has been withdrawn. Then what happened? Liable for registration, because I am providing taxable as well as exempted. So within 30 days from the date of need arises, I have to make an application form GST RAG 01 for the want of registration. I applied. I obtained registration. Now for me 18(1)(a) apply, 18(1)(d) apply, 18(1)(a) apply. Is clear? If so, I am eligible to claim ITC only on inputs but not on capital goods. Is clear? Then when 18(1)(d) will come, I am already registered person. I have two units, unit A, unit B. Unit A taxable, unit B exempted, but I am registered person. For unit B output exempted, therefore not pay the tax. For unit A taxable supply, I am paying the tax. Is my status. Today I came to know unit B also became taxable. Why? Exemption withdrawn. If so, I am not registered person only. Again not required to apply for registration. Therefore 18(1)(a) not apply. Therefore 18(1)(d) apply. 18(1)(d) apply, I am eligible to claim input tax credit on input goods as well as input tax credit on capital goods also. Is clear? For which I am bringing one numeric example for your kind consideration. Excellent example it is. Gautam. Here where we are here. Inward. Yes. Now look here. I will read the problem. You tell me the solution. Gautam Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells alpha, which is exempt from GST. The company sells product alpha only in Tamil Nadu and is not registered under GST. Further, all the inward supplies of the company are taxable under the forward charge. The turnover of the company in the previous year was 55 lakhs. Required registered? Not required. Reason? Exempted supply wholly. The company expects to sell, expects the sales to grow 15% in the current year. Owing to the growing demand, the company decided to increase its production capacity and purchase additional machinery for rupees what value? 30 lakhs on 1st July by paying 18% GST. However, effective from 1st November, the exemption available to alpha was withdrawn by the central government and GST 12% was imposed thereon. The turnover of the company for the half year ended 30 September for 60 lakhs. The board of directors of the Gautam Private Limited wants to know whether they have to register under GST. Yes or no? Yes. Then point B, see, he got alert. Point B. In case in the above question, Gautam Private Limited is already registered with respect to certain taxable supplies being made it along with manufacture of exempted alpha. Other facts remain same. Can it take input tax kit on additional machinery? Then allowed it. But in the earlier example when I referred SNP, this part not there. Examiner assumed in his side and said 18(1)(d) applied, he said, in the earlier example, where he is now going for registration. In this same problem, no, I have not changed a single rupee also. Same name, same name. Give me a point, sir. In the given case, same problem modified by the examiner. Assume if the Gautam is registered person, they have purchased the capital goods. That capital goods kit allowed, they are asking. Yes. When they purchased it? On 1st July. Okay, sir. When the exemption withdrawn? 1st November. Now, how many quarters? July, August, September. July, August, September. 1 quarter. October, November, December. 1 quarter. Part of the quarter, full quarter. 2 quarters. How much percentage reduction? 5% for the previous period. Exemption period. 5% into 2, 10% reduction. What is the amount here? 30 lakhs. 30 lakhs. Where that is, sorry to say, 60 lakhs, na? The turnover, sorry. Then capital purchase what rate Maharaja? Value 30 lakhs. Here is the see, my eyesight is also gone. So 30 lakhs. After human being, we have to rectify. 30 lakhs into 18% is equal to how much? 5 lakh 40,000. 5 lakh 40,000 is total ITC. Less 5% per quarter for 2 quarters, which is 10%. 54,000. Balance 4 lakh 86 ITC allowed. Got the clarity? See the answer. Got the clarity? These questions will come in the exam. This type of questions. Now please come back. The same questions are there in the workbook also I have given, but voluminous are there. Okay. Response customer. Get my point? Which is I shared with you people. Now come back. 18.3. 18.3 very simple, sir. Listen. Under the schedule 2, one point is there, schedule 2. Going concern of an entity going to wind up means business is going to close. Then the business assets will be treated as deemed supply of goods, liable to pay GST. Closure of business, Raja. Business closed permanently. The assets of the organization is declared as supply of goods. Where declared? Schedule 2. Is clear? From that exception means not supply of goods. When going concern is going to continue with other name in the name of amalgamation, absorption, takeover, merger, demerger. You get my point, sir? If let us say Hanuman Limited taken over by Ram Limited, absorption. Get my point, sir? Hanuman Limited not close the business. The business is continuing in the name of Ram Limited. Going concern of Hanuman is going to be continue under the roof of Ram Limited. Therefore, in that case, the Hanuman Limited assets not declared as supply of goods. Is clear? If not supply of goods, this transfer, what type of transfer? Is what type? What is not goods? Service. Section 2, Section 102, service defined. Anything other than goods is service. Is clear? Now, this particular takeover business going concern is going to continue, not supply of goods, supply of service. Such a supply of service are exempted from payment of GST. Where? Under the exemptions category. Repeating, a business closed permanently, going concern going to wind up, is a registered person. Its business asset treated as supply of goods, where it said schedule 2. For which exception, if the going concern, the business is taken over by some other company, or this amalgamated with other company, or the merger, demerger taken place, in that case, the transferor assets and liabilities becomes assets and liabilities of the transferee. As a result, going concern going to continue. If so, such a transfer, not supply of goods, supply of services. That service exempted from the payment of the GST is clearer. Now, Hanuman Limited has input tax credit receivable in input goods, input services, capital goods, 50 lakhs. How much? 50 lakhs. Is asset only, na? Under the head current assets in the books of the Hanuman Limited. Now, Ram Limited taken over the entire business of the Hanuman. Assets and liabilities of Hanuman will become assets and liabilities of the Ram. One of the asset of Hanuman is input tax receivable. How much? 50 lakhs. Will become the assets of the Ram. Yes or no? So, that input tax kit of Hanuman receivable account will become input tax receivable of Ram. Get my point, sir? That is permissible to avail ITC by Ram, set under 18.3. Got the clarity? 18.3 says transferee can avail input tax kit of the transferor in the case of amalgamation, absorption, in and all. For which time limit, section 18, subsection to 1 year from the date of invoice till the date of availing ITC not applicable. Reason 18 subsection 2 applicability restricted to 18.1 only. Under 18.1 class A, class B, class C and class D. For that only 18.2 apply. 18.2 says that my scope of applicability only 18.1. It cannot be extended to 18.3. Get my point, sir? 1:15 actually, I taken some time extra. Now you take a break. The break 45 minutes sufficient seems to be. Okay, because we are running the short of a time, sir. 11th of August we have to complete. How many days left over? 27th, na? 8th, 9th, 10, 11. Only 4 days are there. So we have to cover. So hopefully, if time permits, today we will go up to 6 p.m. Because people requested it. Yes or no? People requested or not? Actually, my time is 4 only. Because if I want to cover something more, where I can able to something more means what? Instead of doing a only example orally, I will take the problem to work out. That liberty will get. Nothing more than that. But you have liberty. You have most welcome at your convenient time. But if I see you in the class space, I feel very happy. That is one of the motivation for me. So it's up to you, my dear friends. If time permits, I will go up to 5 o'clock. If furthermore I have energetic manner to speak, I will go up to 6 p.m. also. So for the time being, 45 minutes lunch break is highly sufficient. So take the break now. Exactly by 2 o'clock we will assemble to continue from section 18, subsection 4.